If you've ever traded with VWAP for any length of time, you've probably experienced this. Price approaches VWAP, your attention immediately shifts to the chart, and you begin looking for an opportunity. Sometimes the trade works, sometimes price reverses almost immediately. So here's a question that rarely gets asked. Why do experienced traders bother using VWAP? And why do they become interested when price approaches the VWAP line? Before we answer that, let's briefly explain what VWAP is. VWAP stands for Volume Weighted Average Price. It represents the average price a stock has traded at throughout the current trading session, with higher volume trades carrying more influence than lower volume trades. In simple terms, VWAP shows the price where today's trading activity has been concentrated. Here at Chart Whisperer, we do not use VWAP as if it were a magical line that predicts where price is going. We use it because it often highlights the places where the market begins revealing its intentions. Our goal isn't to teach you how to follow indicators. It's to help you learn how to use them to be better able to read the market. Let's return to the question. Why does VWAP matter? It is not because price reached a line. It is because as price approaches VWAP, it is coming to a place where the market often begins to make a decision. As price approaches VWAP, buyers and sellers begin revealing their intentions. Will buyers step in and drive the price up, or will sellers gain control and bring the price down? Will price continue moving in the same direction? Or will it kind of hang around this level because neither side has taken control? Those answers are not readily apparent the instant price reaches VWAP. They usually develop over the next several candles. That's why experienced traders spend less time watching the line itself and more time watching the way the market behaves when price goes near it. Suppose price is below VWAP but moving higher and higher. It eventually pulls back toward VWAP. At first, nothing looks unusual. Then something changes. Selling activity starts fading. Volume becomes lighter during pullbacks. Buyers begin stepping in. Finally, a candle breaks through and closes back above VWAP. Notice what just happened. VWAP did not create the opportunity. The opportunity developed as the market gradually revealed buyers stepping in and sellers bowing out as price approached that area. Now compare that with another chart. Price reaches VWAP again, but this time candles alternate between moving above and below the line a few times. Volume may remain inconsistent. Neither buyers nor sellers commit or stay in control for very long. The market hasn't made a move yet, and VWAP is still doing exactly what it does. It's showing you where today's trading activity is centered. The market simply has not yet revealed enough evidence to help you make a decision. And sometimes waiting is exactly what the market is telling you to do. So the next time price approaches VWAP, don't ask yourself whether or not you should buy. Instead, pay attention, observe, and ask, what is the market beginning to reveal here? That single question changes how you read every VWAP test. Because once you stop looking at VWAP as the reason for a trade, you begin seeing it for what it really is. A location on the chart where the market often begins revealing its intentions. And once you learn to recognize those moments, you're no longer reacting to an indicator. You're learning to read the market itself,